traders from across the globe, and welcome to the 1307th edition of Short-Term Trading Live with Oscar, and that would be me, Oscar Carboni. Good evening, traders. This video coming to you on a Sunday night for trading, Sunday through Monday. That is April 13th, 2015. 2 days to tax time. Pay your taxes. As we know, futures trading is absolutely extremely risky, causes substantial financial loss. Forget about being suitable for all traders. It's only suitable for us nuts that like pain and abuse. But if you're one of those nuts who like pain and abuse, stay tuned because I've got a decent video for you. Traders, green OMNI, we love to clap for those green OMNIs. Green OMNI on the board, looking solid in the emini S&P, the NASDAQ, the Dow. In this video, this evening, Sunday evening, April 13th, I'm going to address two crowds, two different-minded yet like-type crowds of traders. So we've got traders with all types of mentalities, but we're all the same in the end. But I've got two different crowds I want to address this evening. I'm addressing, one, the crowd which is confused about if and when the Fed raises rates. I'm going to tell you and show you, well, basically tell you that the 2% inflation rate hike, let's step that back. I don't want to confuse anybody. I don't want to give you too much at once. We are going to talk about the crowd which is confused about when rates get raised. Then I'm going to talk to the gold bugs because a head and shoulders is not a cup and handle just because. I'm sorry, guys. I knew you nuts were going to write to me about this. That chart I've been showing you in video after video is a huge head and shoulders until it's proven to not be. No matter what you would like it to be, it is what it is. You've got to use your eyes and not what you hope for, because your brain doesn't always see things correctly when it comes to trading. Your eyes have a much better shot at seeing a head and shoulders formation on the gold chart than your brain, because your brain's attached to your wallet, and your wallet's got your emotions in it, and you're a gold bug, and you're a nut. Forget about this being a cup and handle for now. While you're in a head and shoulders formation, that is what you call it until it morphs into something else. Stop with the crazy comments, guys. Let it work itself out. Back to addressing the crowd that's possibly confused about when the Fed will raise rates. Traders, let me say this. The Fed cannot raise rates right now. They couldn't possibly, and here is the main reason. It's all about Europe. Europe is just getting on its feet. We have just passed the baton to Europe. It just started a few months ago, and they've had their V bottom, and they're getting on their feet. Now, if we raise interest rates, don't you realize all the money that's starting to trickle into Europe and help its recovery is going to come flooding into the U.S. to capture those higher interest rates? It's not a good idea for the Fed to raise interest rates now. Our country's doing fine with the rates the way they are. If we raise them, we'll do even more business here, but it will hurt the European recovery and other countries that are recovering with it. Now, there's a 2% inflation gauge. The Fed had mentioned before the price of crude cracked to a third of its price, a third of its value. The Fed said at 2% inflation, they would raise rates, and that trigger was real until now. I am telling you this. It's impossible that the 2% inflation rate is valid any longer, and here's why. That included crude oil at $110, $105, average price $100. That's what it included the price of crude at for inflation. That's us buying this stuff in the stores. It is no longer there. We'll never get the 2% inflation in the next year. It's not happening. So the Fed is going to have to change its target. But they love the target of 2% right now. You know why? They know it's not even possible. Forget it without the crude being expensive. No chance of getting there anytime soon. And that leaves them quiet so Europe can get back on its feet. I'm going to show you charts that will unequivocally illustrate to you that it's about Europe right now, and it has to be. And I applaud the Fed. Fed, continue doing what you're doing. I totally get it. I've been watching this thing for 33 plus years, watching all the Fed movement. very closely, much more closely than most of you Omniacs. I study all the time. You guys know that if you know me. The inflation rate, forget it, the trigger at 2% can't happen right now. I am telling you that's a truth. But the Fed doesn't mind leaning on it until everyone else figures it out. So this video is probably going to piss them off a little if they've ever seen it. But I'm telling you now, that's a fallacy. Forget it. It's not happening. That's no longer the trigger. And I've told you in many videos that this would be the trigger. It's no longer possible. So forget the 2% trigger. If they leave it out there, that gives Europe a lot of time to recover. I love what's going on there. Traders, we expect the emini, S&P, the NASDAQ, the Dow to rally again. I'm going to show you something very interesting in charts right now. A few charts, not too many, but stick around. If you like the analysis in these videos, subscribe to them on YouTube. You found me at youtube.com/futures analysts. If you didn't know that, that's where you found me. Subscribe to the YouTube videos. This way, when I put out a new one, you will get an email. Or go direct. Come right to me at livewithoscar.com. Come into my free trading room and allow me to help you understand the charts, the analysis, and these markets, because that is what I do. I live, I eat, I drink, I sleep, I breathe these markets. Ask anyone who knows me. Come on down to livewithoscar.com. Hang out with me and keep me company. All right, traders, let me get to the charts. With no further ado, let's go look at some charts. Okay, traders, the first chart this evening is the NASDAQ daily bar chart, the NQM15, if you will. I've used this chart in the past and showed you that there was a double top. We called it exactly on this day, in fact, when it came down right here. And actually, we called it right here after the double top proved itself. Then we called it right here. Double top worked very well. I think we're now heading up for what some people like to call a triple top. It looks like a magnet. I'm assuming that's where the NASDAQ wants to go next. The OMNI's bullish. The street is bullish. Why not get up there? Now, when we get there, you will find from me that I don't exactly subscribe to something called the triple top. I'll explain it to you when we get there. Don't let this scare you, because we're day traders and we're looking for up. There's plenty of up room there for Sunday, Monday. Let's look at the E-mini S&P chart. You've got the E-mini S&P chart, the same exact situation. Top one, top two, that really worked well. But we've just come out of a bull flag, and it projects higher than what happened on Friday. So getting to the third top, or at least the third stab at that resistance line, is quite likely. And remember, we're day traders. We want this, right? 2 more days to get up there? Fine, we'll take them. 1 day at a time. We're only looking for Sunday through Monday. Then we've got this, traders. Here is the chart once again to you nuts, you gold bugs that won't give up. If this goes up and turns into something completely different, we will then reassess it. But for now, you've got a well-defined left shoulder, absolutely a defined head. You've got a right shoulder, an inverted head and shoulders inside the right shoulder. That, of course, could mean higher, but the bigger formation says no. This is just a shoulder, not quite an inverted head and shoulders. Yes, it looks exactly like one, and maybe it'll even go higher. And if it did, this inverted head and shoulders, I'd expect a head test up here somewhere. That would be natural. Still, I'd be calling for more downside when that's over. So for now, I say it's a head and shoulders. It has not had a head test. Let's see if that was the head test, that little try there. Back down we should go. The larger formation wins over the smaller one, as you might expect, but we trade inside the smaller one until the larger one pans out. We're not trading the gold Sunday through Monday for Omni. We're just going to watch it, but I just wanted to show you that, listen, that is a head and shoulders. This doesn't look anything like a cup and handle at all, no matter how much of a stretch of the imagination. Looks to me like a pair of eyes and a nose before it's a cup and handle. So let's not go crazy out there. Head, shoulder, shoulder, head, shoulder. That is what it is for now. Let's move forward. Now, interesting charts coming up next. Here's your DAX daily bar. We just had a V bottom right here. Aunt Yelen handed the baton over. Europe is now doing QE, and this is what it looks like just a few months past the beginning of QE and the V bottom. And here's why we cannot raise interest rates here in the U.S. Europe is enjoying this move right now. Their market's moving higher. Their stocks are starting to move a little higher. That looks promising. God forbid the U.S. raises interest rates. The money will come pouring out of here and go into U.S. dollar-denominated assets very quickly, and that would put an end to this beautiful rally that you've seen got going on here. The Fed is not stupid. We need Europe to come with us. The Fed has a beautiful spot they're in right now. It's a perfect storm. They do not have to raise rates yet, and that would hurt Europe. They can blame it on inflation not being there, really just backing off so Europe can feel it and enjoy the U.S. not raising rates. That is what's going on right now. Let the Fed tell you whatever they want. Let anyone tell you what they want. Here's the picture. This is why we can't do anything with rates. Because in 2009, we had our V bottom, and we continued on for a long time, uninterrupted. That's exactly what we should do again. Just continue on for a long time, uninterrupted, if we were in Europe right now. Why? Because we started our QE here, and look what happened. But there was no one around to raise interest rates and pull the money from us, as if we raised rates now and did that to Europe. So, no raising rates for now. Forget about the 2% inflation. That's ridiculous. That's no longer even a target. Not valid in my opinion. Just couldn't possibly be any longer. So we're not valid with that target. Whether they use it or not, it's not possible. Right? So ixnay on that one. And if they raised rates, they would stop this beautiful look that you see in the S&P chart ever since the V-bottom 2009. That is very, very, very similar to what I just showed you in the DAX chart. So let's keep our wits about us. The Fed luckily won't raise rates right now. That helps Europe, it helps the U.S., and it helps us citizens. We don't need higher rates. Then you've got this. Traders, even if you thought they were about to raise rates, let me just give you a quick technical picture of why it's probably not likely, at least for a few more months. This goes back to 1988. This was a 4-year move from this dip until the high of that move petered out. It was 4 years in bonds. This is a monthly bond chart back to 1988. This next move lasted about 2 years. It was more like 2 years and a month, but we'll call it 2 years. This next move up. Then from this trough to this peak, 1.5 years. These are rallies throughout the years, right? You got the 80s through the 80s into the 90s, just illustrating what bonds normally do. This next rally lasted 1.9 months. This one, 1.4. This one, a year and a half. This one, a year and a half. Well, this one's 1.6, right? A little bigger than a year and a half. This was 1.9. That was a nice one. The 2 years, the 4 year. Then 1.5. 1.4 is the lowest end. Right now, we are at a 1.2 year rally from this dip. Right? If we follow this. It is nowhere near this one, that one. It's only a little bit close to this one, but we'd ixnay the lowest. We'd ixnay the highest. We'd find ourselves with probably 1.5 years as an average, maybe 1.7. We need to go at least 5 or 6 more months, just according to this chart technically, before this rally peters out, which means bonds go higher, rates continue to stay pinned. Technically, that's what should happen. Then I just showed you those other charts, and basically the fundamental is, as I mentioned, you cannot raise rates right now without derailing Europe. Traders, I hope this helped you understand what's going on out there. Pull your own charts, do your own analysis, and I'll see you all at livewithoscar.com. So, traders, you've seen the charts, and you've got my technical argument for why these bad boys want to go up. ES, NASDAQ, Dow for day trading Sunday, Monday. The two crowds I wanted to address. Crowd about interest rates. I kid you not, that is what's going on out here. I don't care what anyone else says about anything else. Right now, that's what's going on right now. Fed is blessed that they don't have to do anything, because why derail Europe when we need them to do what we just did since 2009? It works really well if the dollar doesn't go too crazy too fast and the Fed doesn't have to do anything. Again, think about the 2% inflation rate. Imagine what we'd have to get inflation all over this country and every product to match where crude was just a year ago. So forget about that trigger. And I don't know what they're going to use next, but you watch. You'll listen to these words. You'll remember this video. No way they're going to use that trigger any longer. It's old-fashioned. So, Lastly was you nuts on the gold chart. Come on now, it's a head and shoulders until it's not. You got that? Let's stick with one formation at a time. Traders, if you like the analysis in this video, you've seen the OmniCamp commercial. I can teach you how to analyze charts, how to behave when you're in trades. Basically, I can transfer a lifetime's worth of knowledge to you in a nice 4-day tailored session held here live in Las Vegas. I have one open ticket left, one seat left for OmniCamp. That is going to be held June 5th, 6th, 7th, and 8th. If you would like to be the seat holder, if you want to come to OmniCamp, come on down to livewithoscar.com. Click the OmniCamp banner at the top right, whatever that is in the video, right. Click the top right and fill out your application. I'll personally call you and qualify you for the final seat. All right, traders, that's about it. I'll stop boring you and get out of here. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that is say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. I'll see you at livewithoscar.com. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.